still doom scrolling, brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief today. We're going to talk about the RBNZ. We're also going to talk about a gold trade idea that we put out earlier today. And we're looking at some Forex pairs. We're going to look at some cross pairs. I think it's a good day to do just that. We've got some Aussie Kiwis going. We've got Aussie CAD. We've also got the Euro CAD that we want to look at, and any other cross pairs that you guys would like to scope out. Be sure to let me know. So remember, I'm How to Trade's head trading coach, Shane Vernier, and we do these Switch Markets live stream to try to help you get up and running with any questions you may have, and then also some trade ideas, and then sort of the news of the day. So it's sort of an unconventional live stream. A lot of these folks that do the online trading live streams sit here and just trade for you all day. I can do that. I can do that easily. I think that we want to give a little bit more flavor to what we're trying to do here, a little more commentary, and give you a breadth, really, of what it is to be a trader in these markets each and every day, and then also answer any questions you may have. So remember, it's an interactive trading experience. Most of the people out there don't ever ask a question, and that's fine. But remember, you guys, your questions is pretty much why I'm here. And then also the trade ideas, of course. I like putting ideas out as well that maybe give you an idea of what I'm looking at, and then also we'll execute some live trades as well. We're probably going to go circle back around to U.S. oil, maybe do some more of that time price offering trading today. Get a lot of good feedback on those trades. I think some of you are following them. Like I said, follow everything at your own risk. I'm not an investment advisor. You have to decide what you're going to do. So good to see everybody out there, and let's see out there in YouTube land. Let me see BP. Good to see a BP India Tech. BIP India Tech. All right, that's a long name. Good to see you out there. Let's see Jason Max and Peace. What's up, Jay? Peace. And then Tina Jing. Always a pleasure, Tina. Over here in the How to Trade community. Tuku, Andrea Garwal. My pleasure to be here, guys. All right, let's go ahead and get started off. We want to go RBNZ on deck, and then also gold resistance on the radar. So this really is sort of the theme of today's live stream. I'm going to break down exactly what you need to know about the RBNZ a little bit later on. We've also got some big news out of the Iran war. It looks like it's kicking off again. But this gold trade idea, I did want to get this one in the books because I think it's a pretty good one. And the reason why, well, we're going to go over it right now. So essentially, what we're looking at for gold potentially, if we do see a rally, and right now we've got about another $360 to rally. Now, a lot of folks are going to say, man, that's just a ton. I mean, that's a lot of a rally. And I said, yeah, but we're early in the month. There's a legitimate chance we could get this trade perhaps in the next week, maybe 2 weeks. So as we're watching this gold market, the first thing that I would point out is big round numbers have been absolutely key. Gold's been tricky. I mean, let's just be honest, brutally honest with you. Absolutely huge blockbuster January. February, still huge volatility. March, wartime starts, big retracement, and then you get a dead bar and a dead bar, really tight ranges there, basically a double doji almost. And then you get the big move in June, and now July is sort of coming back, pairing some of those losses. An 11% loss in June was absolutely huge. Now you're starting to pair some of those losses. Don't be surprised if we get a nice rally here out of gold throughout the rest of this month. Now, it's only the 7th of July. We have a long trading month, but typically July and August are quiet. If you were going to take some time off, July and August aren't bad times to take off. They really aren't historically. Now, we're seeing some action today. We're seeing some action in WTI crude and Brent crude. I'm going to tell you why in a minute. And we're also seeing that negative correlation sort of pop up a little bit with stocks. Now, theoretically, gold not doing too much today, off about 0.5%. But theoretically, when the dollar strengthens, gold's going to take a hit. I'm interested to see what happens because it looks like we're going into our next phase of the Iran-U.S. war already. I sort of have it happening after the midterm elections, but I'm curious to see what's going to happen in the next probably 72 hours. But could we see some safe haven participation if the war does kick off? Well, the war's been a negative bearish market driver, no question about it. For gold, however, we could see some bids enter the market, and if we do, we have a fantastic opportunity to sell right up there. 38% of this monthly range, spike high there, spike low there, 38%, right around 4,500. Key level as well. So we've got a big round number. We've got a Fibonacci retracement. Love it. Already love it. I'm already in. I'm in. So I'm looking to sell right up there in front of 45.06. You can see a marquee level there. This is a trade idea that I put out earlier today. Those come out in the How to Trade trading community. If you don't have a subscription, head on over, get a free one, and you can check out these trade ideas in real time. They get beamed out to your email automatically, or you can check me out on X. I post these on X, ShaneV_trader on X. You could definitely find these there. And then also on LinkedIn. I put them out on LinkedIn. The LinkedIn link to the How to Trade page I just dropped in the YouTube live chat. So There's lots of places to find these ideas if you're interested. These are actionable trade ideas. I'm just sort of showing you what I'm looking at in the market, and then whatever we do on live stream, in any markets you want to look at, I'll give you my opinion on them. And also, we'll take a look at some strategies today. We're going to look at the 9. We're going to look at the 9 EMA, which has really been struggling lately, fighting some severe trends on the short time frames. However, we got a pretty good trade there. I'm facing the Euro Kiwi, I believe, and then also our 920 EMA crossovers developing relatively nicely. So before we change the subject from gold, you can see that's really what I'm laying for. So what could we do sooner than that, though? Let's say you don't want to wait for 4,500 to come into play before you trade. And there's nothing wrong with that. Nothing wrong with that. 920 EMA crossover. This one came out in our newsletter, our Switch Markets newsletter. You can see we had a daily sell signal on the 23rd of April that took a lot of traders to the promised land. You can see that's about a 1 to 4 payoff, and that was sort of a real, not a conservative profit, or stop loss, but it was a stop loss that gave you a chance to get in on the big move, and there it was above that swing high. There was your sell. We're still working that sell. So if you're still holding shorts from the 23rd of April, you're doing very well. You're doing very well. So now we're starting to play the opposite of this. What could happen if we do get that daily crossover? Essentially, it's going to signal the end of this trend. It's going to signal the end of this big move. Now, you'll notice right here, we had sort of a big-time sell that developed right there on that doji, marked a huge sell-off back in March when the war started. Then we rallied. We finally got the crossover, and it failed. You know, sometimes things fail, and that's okay to fail, because even when you failed, you had a beautiful opportunity to reverse and get in on the big move. So right here, we know a couple of things. Number one, the trend is definitely down on the daily. No question about it. However, if we get the crossover on gold, then we have an opportunity potentially to rally back up to that 4,500 in a decent trade, maybe a shift in the macro trend. So I'm sort of excited for this 920 EMA crossover. Remember, very, very simple. Very, very simple strategy. When the 9 EMA crosses over the 20, we're looking to buy. When the 9 crosses under the 20, we're looking to sell. And you can see we've got it all coded up and ready to go. If you're interested in getting that code for yourself, head over to How to Trade Calm on YouTube. And the code is right there underneath the 920 coded video in the comments. I believe I put it the first or second comment. All right, so that's sort of where I wanted to begin here with gold, because it's a pretty good market to be focused on right now. There is opportunity for this thing to open up a little bit, but we've got a multitude of options. We can go long on that daily crossover, or we can go short up there if our key resistance level gets into view, and that's exactly what I would like to see happen. We just got to wait and see what does happen. So out there, and let's see see How to Trade, the How to Trade community. We got Ralph H. and Lita both showing up. Fantastic. Been a few days, Lita. I'm glad to see you back. I'm confident that you're doing well. I'm confident that's been, for a lot of you that are in the UK, that you're trying to stay cool somehow. I don't know if it's just cold showers or maybe a trip down to the beach, but looks like that heat wave is really tough. It's kind of nice here in Dillon, Montana, about 69 degrees. I even sort of sporting the sweater. It's a little chilly this morning. So the cold weather, it's funny. The older you get, the more you really fancy the colder weather as opposed to the hot weather. All right, so let's go ahead and get to the week that is. You can see right now Tuesday's quiet, and it really is a quiet news day. Wednesday, we're going to get cracking with the RBNZ interest rate decision. We're looking for a rate hike there. I'll break that down for you in a minute. And also tomorrow, we're going to have our FOMC Minutes live stream, so be sure to tune in for that. We're going to cover the latest installment of the FOMC Minutes. We'll break down exactly what you need to be looking for in your trading, and then also what we could potentially be doing with regards to I don't know, maybe some trade ideas, maybe some short-term trade ideas. It's going to be one of those that we get a lot of viewers for the FOMC Minutes. However, it's a real easy engagement to mess up. And so we're going to cover some of the pitfalls and try to keep you out of trouble there. Remember, Tuesday, Wednesday, Thursday psychology. It's the primary objective is to hit our weekly P&L goal. We are trying to make money. We want to aggressively trade our plan. We want to make sure that's all systems go. We focus on our execution. We want to cash in on opportunities that are there, and we want to trade our plan. If our strategy says trade it, we trade it. Period. That's it. We are looking to trade right now. We're not looking really to wait. Intraday stuff, we want to trade. Whatever your strategy is, we are trading. And we want to ride the momentum. Remember, Monday is to create momentum, get out of the starting blocks on the right foot. Tuesday, Wednesday, Thursday is for riding the wave and meeting our P&L goals. Friday is for preserving that momentum and making sure that we get paid for our time. That's really all there is to it. Trading can be anything you want. Just make sure that you do exactly what you need to do to really approach these markets in this discipline from a position of strength. That's what that psychology can do. All right, this is the big breaking news. The MOU is signed, but does anybody care? It doesn't look like it. 3 tankers hitting the latest attacks in the Strait of Hormuz. The British military says Iran war live. 3rd tanker struck in the Strait of Hormuz in 24 hours. U.S.-Iran updates. Tankers hit in the Strait of Hormuz as Tehran threatens to ditch talks over Trump's threats. So what we have going here is basically we had the big event over the weekend, which was the what I believe it was, it's not really called a funeral, but a memorial service there for the Ayatollah out of Iran. And it was a big deal. There was a lot of folks who were there. A lot of countries from the Middle East sent dignitaries to the event. And it seems to me that the fallout from that event, you're definitely seeing Iran go on the offensive and hitting, essentially they're hitting ships in the Strait of Hormuz. Iran war live. No talks on a deal if threats continue. I can't pronounce the name. Aragachi warns Trump. Basically, that MOU is on the rocks. And we thought that was coming relatively soon. We weren't wrong. So what's happening right now? WTI crude oil has exploded north by about 2.79%. This has been really probably the biggest significant move to the top side that we've seen in quite some time. You can see right there, nice big move, nice big green candle. You had a nice sell-off there of a rally there, 2.25%. But most of these rallies have been very, very small. They haven't been big. This is a pretty good one. Break into the top side. A few things that I would be aware of. If I was interested in selling this market, probably back off to a weekly. And you'll see a very nice market structure. This is a lot cleaner than gold on the weekly. We had to step back to a monthly on gold, but you can see something like this. Very nice right there, 77.09. That's fantastic topside resistance. We would sell that all day. And this is for WTI futures. This is Augie WTI futures. Let's take this down to a daily, and you'll also see that you've got a 13-day EMA right there at about 72.31. So I would be looking to sell 72.25s here. I think that's a fantastic area potentially to take a scalp, and then also 77. So if these things continue, if you continue to see strikes from Iran on tankers in the Strait of Hormuz, oil prices will continue to rise. There's no question about that. We went down. We filled in that gap area between 67 and 69, the pre-war gap. That's over with. Now we're talking about potentially resuming what was a very voracious and really just an eye ripper to the top side when we talk about crude oil prices in the onset of this war. So what should we do? Well, for me, I'm in a waiting game. Of course, like always, we get paid to wait. We don't get paid to trade. Look at everybody's analysis. Look at every professional trader out there. Look at anybody that's been in the markets for a long period of time. They will all tell you the same thing. They will tell you that less is more. The less they do, the more they make. And waiting for the premium trades is really what this game's all about. Now, you can have a premium on long time frames or short time frames. For me, boy, it's monthly, weekly, daily. And when we get into intraday stuff, that's when the game gets fun. But we have to put our thinking caps on when we trade intraday because it's a lot harder than it is to say stepping up. I know for a fact, 13-day EMA, 72.31. I know if I get a shot to sell 24s, I'm going to have a really good chance to win that trade. I know I am. No question about it. Could we lose? Of course we could lose. Anything could happen. We still got a very, very good chance to step up to the plate and win that trade, though. So I'm interested in taking that. That would be a sort of a primary for me this week. I would look to be taking that. I would also be looking right up here. If things get crazy and wild, selling right in front of 77, that's a pretty good trade as well. So I really want to break down, the hierarchy of trades. The longer the time frames for me mean a lot more than shorter time frames. However, just because they're short time frames does not mean that we can't trade them. Let's take this down to a 30-minute chart, and let's go ahead and just sort of turn on the TPO charts. This is sort of my bread and butter, especially in summertime trading. When it comes to trading dead markets or trading at markets that aren't really active, hyperactive, TPO charts for me really are the bread and butter intraday. I want to know where the volume is. I want to know where we're doing business, and I want to know exactly where I should be looking to get involved at. So right now, what do we have? You got a trend day up for WTI futures. No question about it. You notice our value area high from yesterday was it was tight. And during the overnight, you're right there. You're in that overnight, that London session. A lot of you probably traded it live. Very tight. Tight right there from 69.60, tight right there from 68.70, and then we broke. Why did we break? Because Iran's firing up the Strait of Hormuz. That's why. So, big rally there. Now what do we got? We got a point of control up here, which is right around, 70.38? session point of control, a daily point of control. I prefer the daily over the session. I like breaking the day up into 30-minute time frames. Gives us a good idea of where the point of control potentially was and where it is, and there it is right now. So what is that looking like? 70.37, something like that. Pretty strong trade, and they've already hit it repeatedly. Still, you've got an up day. You've got a chance here potentially to get another trade here. So I'd be looking to buy limit order, and this probably, one contract is okay. 2 contracts is probably where you want to be, and you put it right on that point of control. Right down there, maybe one tick to the top side, 70.38, and there you go. So right in that zone, 70.38, somewhere right in there. Pretty darn good level. You'll notice by your trading dome, your depth of market, what's happening. We went over this yesterday about quiet markets. Not much. Not a bad way to be attacking this market, though, right now. If we do get a chance, it's tightened way up. Put my take profit right up in here somewhere. Let me see, 45. That's not too bad. Maybe right there, right around 43. We'll shoot for a cool $100. A nice 5-tick scalp. I really like that type of trading strategy, given the market structure today. Now, one thing to say about the market structure, and I want to be very clear. Yesterday was rotational. We were trading the value area lows and the value area highs. We weren't really trading the point of control. And the reason why is when you have a flat market, that point of control is sort of where the population density is. That's where everybody is, right? Today, there's no fighting it. You can't really argue with this. Has been a U.S. session trend day up, no question. Starts right there about 9 a.m. Eastern, 7 a.m. my time out here in the Mountain Time Zone, and you're right there looking at a big move up. You've got a nice an A period. Not to get too far ahead of ourselves, but that's an A, B, a C, compression, D period inside, E peaks, F trends, grinds higher, G grinds higher, flat H, and now what are we, an I? I's flat too. I would love to take this buy if we get a chance during this live stream. I just don't know that we will. You can see the consolidation right around 70.50. The sellers aren't really sure they want to abandon. They don't really want to abandon just yet. However, the buyers are definitely winning. Up above 51 now. So we're going to go ahead and leave that in the queue. We're going to wait and see if we get that at some point during this live stream. We may. I'm not confident that we will, though. This market definitely tilted towards the top side, and the reason why was that Iran war. So I definitely wanted to jump in and do a little time price offering trading, a little market profile for you. Those trades we've been extremely profitable with since we started doing them, and it's something that it's more advanced. TPO charts, market profiles, more advanced. However, it's more advanced than a crossover, but when you get into these summertime markets and markets that you're not really sure what to do with them, you let a lot of that U.S. session develop, you let those value areas develop, and then you go to work. And it's really that simple. So that's what we're probably going to be doing a lot more of this summer, that's for sure. Let me see, Tina, very nice graphic. Thank you. I'm sort of transitioning into the AI graphic building mode. It's kind of fun. You just tell it what to do and it builds it. We'll get better at it, though. I'm a rank amateur. But these charts, the TPO charts, a lot of people like the way they look. You watch a lot of live streams out there. Everybody's sort of got a gimmick with their charts. I'm not really into gimmick. I used to get yelled at for making my charts too fancy. My mentor, my uncle, he used to call a chart like this, he'd call it Walt Disney. He says, that looks like you're going to Disney World. That's not trading. All the colors and stuff, he did not like any of that. He had OHLC. Just black bars on his screen, and he had a moving average that was red. The Bollinger midpoint was red, and his moving average was blue, so I stole that from him. But it was OHLC bar charts. They were all the same color. They were all black, and it was very, very vanilla. Great chart, black bars. I should probably build one of those so you guys could see exactly what it looked like. But, it was like watching a black and white movie. I was like, man, those charts are boring. And you see my charts were all in color. And he goes, that's Walt Disney. You don't need that. That looks like Disney World. If you want to be entertained, go watch a movie. And I said, well, all right. Got to be entertained some of the time, don't you? You might as well have fun with it. That's what I say. All right. So the MOU definitely in jeopardy now. We're probably heading towards the next phase of the war. I would almost bet on it. I'm just surprised that it's coming this early. I expected it to come our way probably in middle of November or December. It's coming now. News of the day, ADP employment change weekly doesn't mean much. However, it definitely was sort of a downtick. You can see the last 2 weeks they reported. You can see we were 24,000 beneath 30,000 previous and 21,000 from 24 previous. So we're definitely trending down in those jobs. Remember what happened to our NFP number, came in very weak. Not a good signal for jobs. Sort of skewed a little bit of our interest rate expectations. Atlanta GDP now, don't put too much stock in that. That's a regional bank assigning a growth metric to a region. Doesn't mean a whole lot, so I would scratch that. 52-week T-bill auction. This actually is important. 3.860%. That's quite the hike. I mean, that's a pretty good. That is a pretty good bump in yields, especially from what I guess it would be the last auction. You see, 52 weeks takes us out a year. So this is sort of a longer-term idea of what we believe interest rate expectations are going to be. I wanted to highlight these yields. You'll notice they're just a little bit different because these are on the live market. These were taken sort of from a live market depiction of the yields. But you'll notice that going back to sort of where we were last year at this time, yields were higher. But we were in sort of a hawkish interest rate cycle, and then the yields came down. And what happened right there? March. War starts. Demand for T-bills goes up. Why? A couple of reasons. Number one, safe haven asset, right? T-bills, people started favoring T-bills and the U.S. dollar over gold. That's why gold came off, theoretically, right? What about where we go from here? Why would yields continue to rise? It's still a safe haven? Yeah, probably a little bit. Why would the government still be raising yields, though, on these T-bills? The reason why is they're trying to attract money. They're trying to attract money. So the T-bill yields go up. Theoretically, that's sort of the idea that you're going to see interest rates go up. And that also means that the U.S. government, basically, they're sort of like a panhandler. They're looking to raise a few bucks. That's where the big yields come from. They're also trying to decrease the money supply and indirectly, directly impact inflation without raising the prime interest rates. Long conversation. Don't really need to know it. But this right here is fascinating stuff to me, and I think you're going to see that we're going to be looking at a lot at this as the year goes on. All right, news of the day. RBNZ interest rate decision. 2.5% is what we're expecting, up over 2.25%. Significant move. We believe that the RBNZ is going to begin tightening. The Reserve Bank in New Zealand, you see all this stuff, but essentially the top stories are all decision nobody can call. They believe that the interest rate hikes come, and I tend to agree. Rate hikes could come sooner than later. RBNZ seen starting rate hikes. Hold in July. Well, there you go. Not everybody believes it. ANZ expects RBZ to hike OCR to 2.5%. So here's where we stand right here. If you ever want to know, you just go right to the Reserve Bank of New Zealand, and they're going to give you everything. So the official cash rate, 2.25%, inflation, 3.1. So if we're looking at this from a broad perspective, and we don't want to hear what CNBC has to say, and we don't care about what any of the writers out there at FX Street or any of these Forex outlets want to say, how can we determine for ourselves what we think is going to happen? Inflation. You say, yeah, it's 3.1%, Shane, who cares? 2% is pretty much the rough target for all these central bankers. Now, it's not exact. You're not going to see exact 2%, but 3.1 is still a little bit hot. Still a little bit hot. So official cash rates at 2.25. Most people believe that you're going to see that interest rate hike come across the board. That's going to impact the Kiwis. So this is a good look at your Kiwi chart. We put this out last week. We put it out on a live stream. It wasn't an official trade idea, but you see really beautiful market structure right there from about 58.63 all the way down here to this low about 56.26, and then the nice failure right there at about 57, 57.16. Really beautiful shorts. If you got these shorts, really nice shorts, a couple of them. So are we bearish or bullish from here on the Kiwi? So the jury's still out for me. I mean, from a technical perspective, we're definitely going to be looking at the bearish side of things. And the reason why is you're beneath 38% on the daily. This is a significant trend that you're outside of the Bollinger Bands. Then we sort of tapered off and went up and tested this. So this area between 57-ish, I'd say 57.16 and 56.25 is a big deal. It's a big deal. So what you want to be is dialed in and say, okay, do I believe we're going to get a huge rally here, or is the price going to do not much, or is it going to continue to the downside? What I would say more than likely is you're going to see probably a bit of strength, but it won't be because of what the RBNZ does. I think we're all pretty much ready for them to hike interest rates to combat that 3% inflation.
but I think it's going to be all about the verbiage. It's going to be what the RBNZ says. How hawkish are they? Are they looking at more rate hikes for this year? No more rate cuts? What's the idea? That's what'll drive it. More than likely, they're going to talk about the inflation, and also there's no denying that the Asia Pacific region, even down Australia and New Zealand, the fuel issues, the fuel shortages due to that Iran war are a big deal, and they're spiking inflation in a big way. So I would look for them to be hawkish. I think you're going to get another test of this 57.16. If you do, it's up to you whether you want to go short again. Once again, that area is sort of saturated. So if we do break above that zone, maybe we go to 57.50, maybe 57.75. The high probability trade in my eyes, no question about it, is going to be right up there. That's the one that I like, and I like it a lot. So that would be where I would look to sell. This down here, sort of already been done. It's already been hit. You can hit it again if you want. Just be very conservative with what you're trying to do there. That's definitely key. Big time level though, 57.16. I have no interest in trading 57.50s. Up here though, 57.75. Yeah, why not? I take a shot to the short there. Australian dollar, New Zealand dollar. This one's a little bit different because what you have here is just a trend that's been rocking and rolling for a long time, and it's been all about the Australian dollar and that sort of that correlation, especially back in here, the correlation to gold. And then really since the gold sort of tapered off, you'll notice that the Australian dollar sort of tapered off, at least against the Kiwi. So if we're looking to trade this one, I could give you all the macro levels in the world. I'm not necessarily sure that any of that will help you. The weekly chart, incredibly difficult to really put our finger on. I mean, you can see just really flat. We could sort of say, if you're interested, we could sort of try to make this an ascending wedge. Is it a good one, though? It's not really an ascending wedge. Maybe it's a bull flag, maybe. Sort of brutal, to make any rhyme or reason out of any of this on the weekly. Let's go down to a daily, and you'll see that it gets to be even more of a mess. So you're looking at what? A little bit of a move here, a little bit of a move here. A lot of dojis, a lot of hammers. That's a hammer, nice hammer there. Hammer, neither one of them worked. Doji, right there. We talked a lot about with the double doji formation. Now, somebody can correct me if I'm wrong, but I do believe that double doji right there, in some circles, maybe not all of them, they would consider that potentially a morning star. You say, Shane, a morning star, what do you mean that's just one? Well, sometimes you get a double doji in there. It's a reversal signal, so you can see the big break there. But a lot of times, if you get two of those back-to-back dojis where the ranges don't really change, a lot of folks would consider this formation a morning star, and a morning star is a reversal strategy. So if you wanted to play a morning star, a daily morning star, number one, it's going to be a big trade. You theoretically could go long here. You're stopping yourself out beneath there and putting your profit target up here at maybe 122.84, something like that. It's a significant move. It's about 100 pips, but you do have a decent risk versus reward. You could also bring it into a 1-to-1 exactly if you wanted to, but once again, you're probably going to want to build something a little bit bigger than that. But just remember, this liquidity sweep right here, bearish liquidity sweep, right up around 123. I don't know that I would be putting my profit target above 123. I think you could really run into trouble there. If you're going to do business here, you probably do it right there on this side of the 123 level. And definitely be aware of this high right up here, this 122.86. Be aware of that liquidity sweep right there, that bearish sweep lower. Be ready. That's a big deal. I probably want to take profits ahead of that. I don't know that I want to mess with that. It's clearly an area of natural resistance, 123 being the catalyst for that sweep. Definitely want to check that one out. Interesting. All right, we do have a couple other Kiwis, I believe. We have what we have here. We have the New Zealand dollar, the Euro New Zealand dollar. This is our 9 EMA trading strategy, and you can see what really is developing here. We had an interesting play. I mean, you could have built a really nice short scalp here. Stop loss could have been right up above your 9 EMA, somewhere right in there. Profit target could have been dialed in probably right in here, and you would have had an opportunity potentially to already take your profits. However, you could also wait. One of the great things about a strategy is you don't have to execute it really any way you don't want to. A lot of folks, and really a lot of the feedback we've gotten on this 9 EMA has been, Shane, the better entry is waiting for a pullback to the 9 EMA itself and then going short. So if you waited for a pullback right in here, you could have got short. That's sort of the trade that we have rolling right this minute. Is it a great trade? Well, I mean, it's flat. It's a flat trade. So you're waiting for a big move. This would be the kind of trade that if you wanted to risk it, if you wanted to take the risk and put the capital out, it's not a bad risk with regards to the news cycle. RBNZ will shake this up a bit. If it does shake it up a bit, then you've got a chance to go down and hit your profit target. If not, you could be in a little bit of trouble. So we're showing a few different strategies here. We're showing my Fibonacci's. We're showing the 920 EMA crossover, then also the 9 EMA, just to sort of give you a variety of different ways to approach the market. Now, let's talk gaps. Our Dell gap from yesterday, struggling a little bit. We're down a few bucks. Took the short from right in here thinking we were going to get a return down to this gap area for Dell. Remember yesterday, Trump sort of pumped Dell, gave it some shine on the open, and you can see really since then it's been up. It's up again today. I still like it. I still like the opportunity to get a shot at the gap, but this one may take a little bit longer than we thought. But right down in here is where we'd be looking, somewhere right around 350, somewhere down in that zone. And right now we're trading, about 420. So something different's going to have to happen here for us to win. But remember, gaps have a way of getting filled. So I really don't have too much of a problem just holding this one. If you were in a CFD, and if you are trading that CFD, you've absolutely got to make sure that you understand your swap fees and what it costs you to make these trades and hold these trades specifically. So definitely want to cover that. A couple other things before we sign off for today. Not really a huge news day. We got a couple cross pairs that we're going to look at. Let's go ahead and check in on the CME Fed Watch Index. We've got the FOMC minutes coming up tomorrow. I'm going to go ahead and cover that live, and you can see what we've got cooking here is basically what we're expecting at the July meeting. That would be the 29th of July, later this month. We're looking at about a 75% chance that rates are being held static where they're at, and we're only looking at about a 25% chance as of right now that you're going to get a rate hike. We're watching this very closely. We're waiting for any news out of Kevin Warsh, potentially, that would give us a clue of how fast the Fed wants to raise interest rates. I would be surprised if they raise them right now coming off the weak jobs numbers and potentially a second phase of that Iran war. I would be very, very surprised if that was the case. However, we have to sort of take a look at it and say, okay, what do we think? Well, right there it is. 25 basis point, 25%. So we're watching that closely as well. As far as the rest of this stuff, we made a video on our Switch Markets YouTube channel not too long ago that talked all about all these different ways to read this Fed Watch. I'm not sure that this is going to matter much anymore. I believe that the aggregate, the futures traders are going to be really what drives this because when we start talking about the dot plot, you remember the last Fed meeting, Kevin Warsh was not too high on the dot plot. That might be going the way of the dodo. They may not even fill it out anymore. So this is going to change a little bit moving forward, these expectations. However, by December, how's our bell curve holding up? Which way is it shifting, to the right or the left? Starting to shift to the right. Now we're pricing about an 80% chance of at least one rate hike for the rest of this year, at least one, potentially about another, 40% chance, 38% chance, somewhere in there that we're going to get at least two. We're going into an interesting period for Fed policy, no question about it. All right, so let's go ahead and fire this up. Australian dollar, New Zealand dollar, we already covered that. Aussie CAD, one of my favorites. This would be a trade idea. I thought about putting this one out today, but this is a pretty good trade. Very tight in here, very tight on the daily. But you do have a 13-period EMA down there at about 98.39, and then you could also just sort of take this spike low to sort of today's high, and you see right where we're rotating. 98.25 is not a bad scalp either. You'll notice that the spread's not the best on this one. It's to about 2.4 pips. You're going to see this spread, this Aussie CAD, is going to be a little bit bigger than some of the other pairs. Interesting. I would say, personally, the Canadian dollar definitely a beneficiary from WTI crude rallying today. What are you looking at here? 98.36. I don't want that. 98.25-ish, 23. That's a pretty good one. And, of course, there's always a couple of different ways to look at these charts. And you can look at the weekly. You can pull a weekly and say, what do I want from the weekly? And I'd say, well, you don't have much there, guys. I don't care what you want from it. There's not much there. There really isn't. Very, very flat market. A lot of spikes. You'll notice when you see a lot of spikes, spike low, spike high, spike low, spike high, spike low, spike high. When you see stuff like that, you need to really say, maybe this market's not for me. It's choppy, right? one thing you can do is always try to clean it up. Back off. Take it to a larger time frame. Now, this trade right here, this will be the best level that I can really put out there for you in the Aussie CAD. However, may or may not come into play. Spike low going back to November 3rd of 2025. What do you think that was? It's the same spike low that we've been working our long-term gold charts off of. 96.12, of course. That's where we want to do business to the long side from. The real question is are we going to get a chance? Inside month, maybe we get a break. The only way we're going to get that break is if crude oil starts rallying again and gold sort of flatlines. So if you see maybe a resumption to the war, something like March, then we may get a shot at that. We may get a shot at that level. Watching the Aussie CAD closely, though, if you wanted to trade it on extremely short time frames, you go to the 4-hour chart. Nice big move there. If you feel like scalping right now, 4 hours, spike high, spike low, pull back 38% right around 98.50. 98.58 coincides with that 13-period EMA on the 4-hour time frame for the Aussie CAD, 98.58. Not a bad level. Not a bad level. However, 2.4 spread, so you're probably looking at like a 10-pip profit there. Maybe 12. I think 12 is pushing it. Something you may want to watch there in the Aussie CAD. Euro CAD. Definitely want to show this one. We're talking about the Canadian dollar a lot right now today. It's because crude oil's on the move. So when crude oil's on the move, we start to think about our commodity pairs, right? We start to think about the loonie, which has a strong affiliation, a strong correlation with the Canadian dollar. And you can see right here, there's your nice big sell-off. And now you're potentially getting that cross under, that 9 EMA cross under the 20. Maybe, just maybe, we can get that signal to set up and give us a nice sell. You can see we really got some good stuff on that sell. This sell gave us probably a nice scalp. This buy was a complete loser. This buy, pretty good move on that buy. This buy here, pretty good move. Market's opening up maybe just a hair for us, giving us an opportunity. Give me that cross under and we'll start looking at the sell there on the Euro CAD. So that's a good look at a few pairs that I've sort of got on the radar there. A lot of it has to do with the Canadian dollar and because of the movement that we've got in WTI crude oil. We've got our gold levels out to work on. As far as our crude oil, you can see right there, we've got our buy limits locked and loaded on our point of control. I just don't think that we're going to get it. Right now we're printing 70.67. Probably not going to get a trade. You might get a late day trade. We've got about an hour of premium trade here in this WTI. This is August WTI futures. This is pretty much what your U.S. oil. This is what your U.S. oil CFD is tracking right now. Yeah, 70.68, 70.67. Essentially, that's what it is tracking. So that's the price of crude at the moment. We're just going to have to wait and see if we get a pullback. But I really wouldn't mind the pullback at all. Pullback from that point of control, and that may move north as the day sort of develops and moves on. But that right there, pretty good. Going into tomorrow's trade for crude oil. If we see a lot of trade up here, this could definitely get top heavy, and we could be looking at potentially at a B formation. In this type of scenario, typically you go down and trade the middle, and the idea is that you're going to fill it out into sort of the bell curve. I don't really know if that's going to be the case. This is pretty thick in here. This isn't real thin, but we could say potentially that this area down in here could be vulnerable right around 70. Where would you take the short from, though? Probably wouldn't be looking to go short until tomorrow's session. That would be the reality of the situation. Packham, good to see you, Packham. Welcome. All right, everybody. I don't think we're going to get this trade right here. 60, we're down at 70.38. We're more than likely not going to get that. Let's take a look at gold futures here, see if we can get something cooking on this one. Okay, there is your there's your time price offering chart. Okay, right here, you're right at that. I mean, you're right at the point of control. The point of control is right there for this U.S. session at about 41, let's see, 41.56, somewhere like that. So you theoretically, you could look to buy something like that. 2 units. We could be looking to do that. 157.4. We could certainly do that. I want to get exactly where it is. 50, what is it? Okay, 56.2. And we're right there at 56.5. So I don't necessarily mind that. The one thing that I would sort of urge everybody to be very careful with, especially with gold futures, this time of day, the volume is really dried up. And when you see your trading dome, you can see all of a sudden there is a little bit of a spread work in there. And this is August gold futures. but there is a little bit of a spread. It's not a big one, but it can vary just a bit because there just isn't that much volume in there. Look at, you see one contract here, not nearly as big as, say, something like the E-mini S&P 500, where you've got, 13, 25 contracts, 26, 25, things like that. That volume is significant. This volume right here is extremely, extremely low, but that point of control, probably a pretty good late day trade if you wanted to get it, but be careful with it. Be careful with it. You don't want to commit too much to something like this because the volumes are so low. You could definitely fall prey to what we would call a sweep. This market could get swept just by somebody coming in with 50 lots, could really move the market. Interesting stuff, though, here for both WTI and gold. Point of control, though, was a pretty good trade a minute ago. Maybe you get it, maybe you don't get it. As far as WTI crude goes, though, down to 70.56. What was our point of control? Is 38. That's going to be a pretty good trade. I don't have a problem with that, but the problem is going to be just getting it, right? All right, everybody, that's a wrap. So remember, tonight's big event is going to be the RBNZ interest rate decision. So if you are trading the Kiwi pairs, be ready for that. Be ready for that event. I think that you're going to see a rate hike. I sort of agree with the consensus here. 3% inflation. Traditionally, the RBNZ has been a hawk. I think they're going to look to hike rates and get inflation under control there. As far as what we have on tap for you tomorrow, FOMC minutes release. We may do an extended session. I may sit here for a few hours and trade it. We may go over it live. Might be something you just watch in pieces as you get time. But we may see about making a few pips on that one. And also, you got EIA crude oil inventories tomorrow, so you definitely want to be aware of that. But for right now, sort of a real quiet Tuesday session. It's just a lackluster, sort of a quiet week right now. Big mover and shaker commodities. That's because of the Iran war. Are we going to get any moves this week? I think it's going to be really tough. But we're going to sit in the saddle here and see if we can get something cooking, that's for sure. All right, everybody, I'm going to go ahead and sign off for right this minute. If you have any questions at all, head on over to the How to Trade trading room. Go ahead and get your free subscription. Click on my picture. Send me a private message. Say hello. Tell me what you think. If you can't figure out how to do that, contact the support team over at How to Trade. They'll get you started. And also, if you're looking for anywhere to trade at all, check out Switch Markets. They've got a lot going on. There's some big news for Switch Markets that's going to be breaking this quarter in Q3. I'm going to wait until it's time, but we're going to dive into it. When the time comes, I'm going to be promoting a lot of new products that they're launching, some that have been improved greatly, and a lot of it is going to be leaning into that AI space, which I know a lot of you are interested in. Don't run from AI. There's no point to run from AI. Crude trading back down to about 70.52. Might get a shot at it. Who knows? All right, everybody, that's a wrap for me. Have a fantastic trading day, and as always, trade the action well, and we'll talk soon. See you. Traders all over the world are already using Switch Markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, Switch Markets, let's do this. When you're ready to trade, Switch Markets is waiting for you.